Ladies and gentlemen, good day and welcome to the Shriram Transport Finance Q3 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Umesh Revankar, Executive Vice Chairman. Thank you, and over to you, sir.
Thanks, Sagar. Good evening, friends from India and Asia. Warm welcome to all of you. Greetings and good morning to those who are joined from the western part of the world. To present Q3 call today, I have with me Mr. Chakravarti, Managing Director and CEO, Mr. Parag Sharma, Joint Managing Director and CFO, Mr. Sundar, Joint Managing Director, Head of Accounts. We also have with you Mr. Agarwal from Shriram Housing. We also have Sanjay Kumar Mundra from our Investor Relation Head. It has been an encouraging third quarter for the Shriram Finance. We are seeing fruitful dividend in our operation post-merger on the back of multi-products being offered across our branch network. To first a quick look at the Indian economy. The Indian economy expanded by 7.6% growth in the second quarter, considerably higher than the consensus estimate. The surge was largely led by manufacturing sector, which jumped 13.9 year-on-year in the second quarter, helped by a few favorable base and improved volume growth. With the latest number, GDP added 7.7 during the first quarter, half of the year, as compared to 9.5% a year ago. India's real GDP growth in 2024 is estimated at 7.3 compared to 7.2 year ago. As per the first advance estimate released by NSO, which reckons the economy will outperform 7%, even endorsed by the RBI recently. On the inflation, retail inflation in December increased to 4-month high at 5.69, slightly better than expectation, but still rose mildly from 5.55 in the month of November. The wholesale inflation also rose to 9 months high to 0.73% for the month of December from 0.23 recorded in the month of November. RBI in its MPC meeting on December 8 has kept the key policy repo rate unchanged at 6.5 by unanimous decision. This is the fifth meeting on trot that MPC decided to maintain the status quo on repo rate. However, RBI raised GDP growth projection for FY24 to 7% from 6.5 earlier on buoyant domestic demand and higher capacity utilization in manufacturing sector. CPI inflation projected at 5.4 for FY24 with Q3 at 5.6. We expect steady liquidity in the system with stable interest rate environment. The rural economy and monsoon, as per the Union Farm Ministry data, Rabi crop sown in the country was 4.4% higher to 620.62 lakh hectare as compared to 594.62 lakh hectare sown from the previous cropping season. Year-on-year increase is higher in all crops, with wheat being highest, indicating healthy rural economy going forward. The Cabinet Committee has increased the minimum support price for the Rabi crops in between 2 to 7% for the financial year 24-25, which includes wheat, pulses, and oilseeds. India's GST collection for the month of December 23 increased by 10.28 to 1.65 lakh crore as against 1.5 lakh crore in December 22. The December 23 collection however, was lower than 1.68 collected in November and even down from 1.72 from October. It is seventh time the gross GST collection has increased, have crossed 1.6 lakh crore mark in FY2023-24. The gross GST collection for the first 9 months of FY24 increased by 12% to 14.97 lakh crore, is 12% higher than the GST collection in the year FY22-23. The government spend on infrastructure continued to remain strong with a strong GST collection. Government recently announced that Textile Ministry has mapped 8 sanctioned PM Mitra parks on PM Gati National Master Plan portal, while Pharmaceutical Department has reported successful completion of 129 pharma clusters and 23 medical device cluster projects. This in addition to ongoing road and railway projects, helping better logistics to succeed the agenda of Make in India happen. Coming to the auto industry, the total CV sales in Q3-24 was 2.35 lakh units against 2.27 lakh units in Q3-23. And for 9 months, it was 6.99 against 6.83. Within CV, M&HCV sales recorded 91,370 units against 85,678 for the Q3-23, and for 9 months, it registered 9% growth with sales number 2.63 lakh units against 2.41 units sold. LCV sales in Q3-23 was 1.44 lakh unit against 1.41 lakh unit, and for 9 months, it was 4.36 lakhs against 4.42. Passenger vehicle has registered a growth of 8.3% with 10.1 lakh units being sold as against 9.35 lakh units in Q3-23. For the 9 months, it registered 7.3% with 30.83 lakh units sold as against 28.72 lakh units sold in the same period last year. Two-wheeler recorded robust 22.6% with the sales of 47.31 lakhs units in Q3-24 against 38.59 lakh units sold in Q3 FY23. For the 9 months, it recorded a growth of 9.9% with the sales of 134.71 lakh units against 122.58 lakh units sold in the same period last year, indicating strong rural and semi-urban demand. Three-wheelers, the Q3 FY24 registered strong growth of 62.6% with 1.87 lakh units sold versus 1.39 lakh units sold in Q3-23. For the 9 months, it recorded 57.2% increase with sales of 5.27 lakh units as against 3.35 lakh units sold in the same period last year, which implies e-commerce and last-mile delivery is growing very fast. Tractor sales stands at 2.03 lakh units as against 2.16 lakh units in Q3-23, and for the 9 months, it recorded a growth of 6.8% with sales of 6.48 lakh units as against 6.06 lakh units sold in the same period last year. We believe both agri activity and income continue to grow further, and that will create increased demand for mechanized farming and better credit demand. On construction equipment, the Q3 FY24 registered a strong growth of 29.6 with 33,121 units sold versus 25,565 units sold in Q3 FY23, and for the 9 months it recorded a growth of 26.8% with sales of 101,798 units as against 80,302 units sold in the same period last year, indicating continued strong infra-related spend and real estate activity. Now I shall ask my colleague, Mr. Chakravarti, to take through operational performance. Thank you.
Thank you. Hello all. This is Chakravarti here. I welcome all of you to our Q3 FY24 earnings call, and I trust you have had the opportunity to peruse our results that are posted on the website of the stock exchanges. We have registered a disbursement growth of 29.21% year-on-year and 9.2% quarter-on-quarter. Our disbursements in Q3 FY24 this year aggregated to rupees 37,787.84 crores versus 29,245.26 crores in Q3 FY23 and versus 34,605.60 crore in Q2 FY24. Our AUM as on 31st December 2023 registered a growth of 20.70% over Q3 FY23 and a 5.7% sequentially. Our AUM stood at 2,14,233.47 crores as against 1,77,498.02 crore a year ago and rupees 2,02,640.96 crore in Q2 FY24. Our net interest income in Q3 FY24 registered a growth of 15.04% year-on-year and of 5.72% quarter-on-quarter. We earned a net interest income of rupees 5,093.93 crore in Q3 FY24 this year as compared to rupees 4,427.88 crore in Q3 FY23 and rupees 4,818.18 crores in Q2 FY24. Our net interest margin was 8.99% as against 8.52% in Q3 FY23 and 8.93% in Q2 FY24. Our profit after tax grew by 2.33% in Q3 FY24 over Q3 FY23 and by 3.86% over Q2 FY24. We registered a PAT of 1,818.34 crore for Q3 FY24 as compared to rupees 1,776.97 crore in Q3 FY23 and rupees 1,750.84 crore in Q2 FY24. Our earnings per share for the quarter stood at rupees 48.42 as against rupees 47.46 in Q3 FY23 and rupees 46.67 in Q2 FY24. On our asset quality, our gross stage 3 in Q3 FY24 stood at 5.66% and net stage at 2.72%. These numbers thus show an improvement over the corresponding numbers of 6.29% gross and 3.2% net in Q3 FY23 and 5.79% gross and 2.8% in Q2 FY24. Our credit cost for Q3 FY24 stood at 2.15% as against 1.75% for Q3 FY23 and 2.02% for Q2 FY24. Our cost to income ratio was 25.14% in Q3 FY24 as against 22.23% recorded in Q3 FY23. Our cost to income ratio for Q2 FY24 was 25.68%. Regarding our subsidiary Shriram Housing Finance Limited, they have registered a disbursement growth of 69.64% over the same quarter last year. Disbursements in Q3 this year were 1,698.16 crore as against 1,001.05 crores in Q3 FY23. Shriram Housing's AUM as on 31st December 2023 exhibited a growth of 67.53% year-on-year and 11.18% sequentially. AUM stood at 12,025.24 crore at the end of Q3 FY24 as against rupees 7,178.16 crore in Q3 FY23 and rupees 10,816.03 crore in Q2 FY24. Their net interest income registered a growth of 33.44% in Q3 FY24 over Q3 FY23 FY23 and 6.3% over Q2 FY24. Net interest income for Q3 FY24 was rupees 103.57 crore as compared to 77.62 crores in Q3 FY23 and rupees 97.43 crores in Q2 FY24. Shriram Housing Finance has also registered a profit after tax growth of 69.08% in Q3 FY24 over Q3 FY23 and of 27.57% over Q2 FY24. PAT for the third quarter of this year was 61.52 crores as compared to 36.38 crores for Q3 FY23 and 48.22 crores for Q2 FY24. The EPS stood at rupees 1.88 as against 1.12 in Q3 FY23 and against rupees 1.48 in Q2 FY24. Shriram Housing's gross stage 3 for Q3 FY24 stood at 1.01% and their net stage 3 came in at 0.75%. In comparison, these numbers were 1.15% on gross and 0.87 on net in Q3 FY23 and at 1.08% gross and 0.82% net in Q2 FY24. I shall now request our whole-time director and CFO, Mr. Parag Sharma, to talk to you about our resource raising activities, after which our JMD, Mr. Sundar, will brief you about accounting and regulatory aspects. One thing I would also like to, I'm very happy to tell you is that the board has declared a dividend of, interim dividend of 100% in the just concluded board meeting. Thank you.
Yeah, good evening, everyone. I am Parag here. So on the liabilities front, total liabilities stands at 1,77,000 crores, which is up by 12,000 crores from the previous quarter. We continue to maintain diversity in our liabilities with 24% coming from retail deposits. The capital market is 21% of the overall liability. Securitization continues at 14%. The external commercial borrowing is at 13% and the term borrowing from banks and institutions is around 28%. The total cost of debt is 8.96 as of December, which has gone up by around 9 basis points from the September 23 period. We continue to maintain 3 months of liability repayment into liquid assets, which was 17,453 crores, which is good enough to meet the liabilities for January, February, March. However, we have raised a substantial portion of external commercial borrowing in January, which is 750 million at 6.625 coupon, and this will enhance our liquidity to the 4 months of liability repayment. So that money has come in last week. The liquidity coverage ratio stands at 256.25%, and the overall borrowing for the quarter September to December was 24,000 crores, 24,337 crores. The ALM surplus up to 1 year, all buckets being positive, and surplus up to 1 year is 29,646 crores. The incremental cost of borrowing has slightly gone up to 8.95% now, which was around 8.7 in the previous quarter. The leverage ratio stands at 3.77 times versus 3.59 in the previous period ended September. With this, I hand over to Sundar for his comments.
Good evening, everyone. The employee count as on 31st December was 73,485 as against 71,373 as on September 2023, an net increase of 2,112 employees. The stage 3 as on December was 5.66 as against 5.79 in September. The stage 1 PD was 7.89% as against 7.89 in the previous quarter. the stage 2 PD was at 18.25% as against 18.21% in the previous quarter, and the LGD was at 41.45% in December as against 41.39% in the previous quarter. And with this, I would like to hand it over to the moderator for opening the forum for question and answer.
Thank you. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. An operator will take your name and announce your turn in the question queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Maruk Adajania from Nuvama. Please go ahead.
Good evening and congratulations. So my first question is on margins. It has already surpassed your guidance and it has stood steady for the last very strong for the last 2 quarters. And the growth in interest expenses is also on the lower side. So how do we take margins, look at margins from here on? I know that an increase in the liquidity cover was mentioned earlier, but just in terms of margins, what range of margins do we now look at? That's my first question.
So I think the margins, we are actually hopeful that we will be able to hold the margins at around 8.9% going forward.
Okay, so you can hold it here with changing mix, even though costs will rise, or?
We feel that the costs, interest costs, we don't believe that they will rise any further. As of now, we are hoping that it will not rise. But even then, as you put it, since the mix is also slightly altering, we were actually very confident that we will be able to hold it at 8.9.
Both the mix and our ability to pass on the increased cost, that will give us the confidence of keeping this margin.
Okay, sir. So my next question is on AUM. Especially outlook for CV growth. How it gets, for you, especially for your CV financing, not so much for the sector, on how it could or if it at all would be impacted in elections, and how do we look at it from, say, a 1-year perspective? Because the share of CVs has been coming down.
Yeah. Now, Maru, you look at the guidance. We gave the guidance of 12 to 15% growth in CV right in the beginning, even during the merger, and we are maintaining that. If you look at the AUM growth, CV is growing at 13%. So that is something we are maintaining. And we know that in economic ups and downs, CV can go up and down. Therefore, we are very steady in our CV. Whereas high margin, high yielding businesses, we are increasing, which have shorter tenor and better visibility. Because shorter tenor, visibility will be better, margins are better. So our gold loan, two-wheeler and passenger vehicle, we are focusing on. And these are the products which can be done from all the branches, all across all the 3,000 branches we can do. So that's how we have been able to manage. And the election will not have a big impact because CV demand mostly depends on the infrastructure activity and overall economic activity. Both are being good. And we expect there is a very steady growth for CV. And plus, since the CV cycle has just started 2 years back, and the used CV demand will come at a lag. So we expect the CV demand to continue to remain good for next couple of years. And as I was telling you, we will maintain a 12 to 15% growth in CV, which is very steady.
Even in FY25. And what would be the overall AUM growth you would look at in FY25?
We will give guidance of 15% only because in the beginning we had given 15% guidance for 3 years. And this year's economic activity being quite good, we grew at 20%. But in the long run, or maybe even in the next financial year, we would like to give a guidance of 15%.
Okay, sir. Thank you.
Thank you. The next question is from the line of Vikram Raghavan from Moon Capital. Please go ahead.
Thank you for giving me the opportunity and congratulations on the results. Sorry I joined late, so I may have missed it. I just have two questions. One is, what is the disbursements for the quarter? And second, the guidance on credit costs.
The disbursement for the quarter was 37,787 crores as against 34,605 in the previous quarter.
The credit cost guidance will be 2% for the full year. For the quarter, it was 2.15. For the full year, it will be 2%.
Thank you so much.
Thank you. The next question is from the line of Avinash Singh from MK Global. Please go ahead.
Yeah, good evening. Thanks for the opportunity. My question is on credit cost. I recall you explained some changes into the PD and LGD. This quarter has seen increase, overall your credit cost, and you are still maintaining 2% guidance. So which product segment particularly has sort of led to, or rather you are seeing this, your PD, LGD changing more? And, despite this increase, you are still guiding for 2%. So, where do you sort of see that, credit cost will moderate? And the second one, again, related would be, now on your personal loan segment, your overall GS3 PCR is 53% odd, whereas, in the personal loan that's largely unsecured and, of course, relatively in your book, you are still kind of keeping it around 50-odd%. So what is sort of leading to, that having a personal loan PCR being lower than your overall PCR? Thanks.
The quarter-on-quarter PD movement has not been significant. If you see, the stage 1 PD was stable at 7.89, which was similar to what was there in the previous quarter. And the stage 2 PD was 18.25, a marginal increase of 4 basis points compared to the previous quarter. And LGD also, if you see, it is 6 basis point increase compared to the previous quarter. Again, there is a combination of various factors of the mix and all those things which drives this number. And coming to your other question of personal loan, the LGD, coverage which we maintain is based on the ECL norms, which is based on the historical track record. So as of now, the personal loan has been behaving pretty stable. And as we have also indicated in the previous calls that we extend these personal loans to customers who have already demonstrated by paying off the full two-wheeler loans. And hence, the default is comparatively lesser compared to the certain other segments.
Okay, thanks. One follow-up, if I may have, on Shriram Housing, your subsidiary. Also, the growth is pretty strong, and particularly on the co-lending DA side. So, if you can help us understand, what kind of, who are your kind of a key partner among the banks? And also, there have been sort of reports around this, your plan to divest this. So, what's going on there?
Yeah. This is G.S. Agarwal here. In terms of co-lending, we are basically doing co-lending with one PSU bank and one private bank. And DA, we are doing mostly with all the private banks and PSU banks. And our total DA and co-lending volume is close to 20-21% of our total AUM. Yeah. In terms of divestment, I will
we are looking at capital infusion for the Shriram housing because it is growing. So we are looking at the various options, and any one of the options that suits, we will take the call. It is basically to give growth capital. We are looking at the various options.
Okay, thank you.
Thank you. The next question is from the line of Shweta Daptardar from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity and congratulations on good earnings set. So I have two questions. If you could throw light on the write-off trends this quarter vis-a-vis previous quarter, and also a bit on asset quality. I think you partially answered this in previous questions. So what has changed besides asset mix in terms of, across products or asset classes, wherein certain products would have put up benign asset quality trends and others would have been slightly, some swings there, which has led to such market improvement in GNPAs and credit costs? Thank you.
The breakup of the credit cost for the current quarter is write-offs are 725 crores and provisions are 525 crores, totaling to 1250 crores. This compares with the previous quarter, write-off being 839 crores and provisions being 289, totaling to 1128. And the other question as regards the asset quality, it has been fairly holding up, and then there has been a marginal reduction in the stage 3 assets. And stage 2 assets also are more or less holding up compared to the previous quarter.
Now, the economic environment has been quite positive for all the businesses which we are in, whether it is infrastructure, whether it's the logistics, whether it is the demand for a two-wheeler, that is the rural economy or semi-urban economy. So we are quite confident and that our asset quality will hold good in the coming quarters. Even though the elections are likely to be there in the next financial year, typically the election, election time, the diversion of mind of the business activities before 15-20 days. It will not have a bigger impact for the full year or maybe for a full quarter.
Okay, so I'll squeeze in one more question. Does anything change on the goalpost on growth outlook now that you are 20% plus? Thank you.
No, see, we will be looking at this year. We definitely will be looking at 20% AUM growth. But for the longer period, we have given a 15% guidance in around during the merger announcement and post that. So that will continue to remain.
Sure. Thank you, sir.
Thank you. The next question is from the line of an engineer from CLSA. Please go ahead.
Yeah, hi. Congrats on the quarter. Thanks for taking my question. Just one clarification. Did I hear the incremental borrowing cost?
No, we did not get you.
Sorry to interrupt. Sir, your line. Could you please repeat your question once again?
Yeah. Am I audible now, operator?
Yes, sir.
So,
sir, again, there is a breakage from your line, sir.
Okay. Now you hear me?
It's a bit better, sir. In case if you are using the speaker mode, may I request you to use the...
No. I'm on a handset.
Perfect. Yeah. It is better now, sir.
Yeah, okay. So, no, just...
If your question is regarding the incremental cost of borrowing, yes,
yeah.
I mentioned it at 8.95.
And up 25 bips QOQ, is it?
Correct.
So this is because of the risk-weight guidelines, or what has caused this jump?
In fact, there will be factors regarding mix of liabilities that we have borrowed. We have also increased our retail deposit rate. We have higher duration of capital market borrowing. With a longer duration, the cost is generally up. And also the other term borrowing for the bank, there has been a slight increase in cost.
Okay. And so this ECB we raised, what would be the fully hedged cost?
Okay. So on fully hedged, what we have raised will be around 9.5, but there is a withholding tax which has to be grossed up, so it will be closer to around 10%.
Understood. And so secondly, on Shriram Housing Finance, I just wanted to understand our distribution is from all our 1,800 odd branches, or what is the distribution for the HFC subsidiary?
No. So the HFC is focusing only on 8 states. So they're not present across the country. Their focus area is 8 states, and probably we'll be adding one more state this fiscal. But only here, and their offices are exclusive.
149 branches.
149 offices, and all of them are exclusive to the SFL network.
Okay. So because, sir, at this scale, we are at 12,000 crores, and when we've looked at other affordable housing financiers, we don't see players of this size growing at 60-70%. So I just wanted to understand, what's giving us this edge on growth versus some of the other players that are actually listed of the same size.
Basically, as I said, strategy of focusing and going deep into territories. So we have identified those 8-9 states where we felt that about 70% of the business is there. So, and with a conscious strategy of going deep in those territories. For example, Tamil Nadu, Karnataka, the southern states of Tamil Nadu, Karnataka, Andhra Pradesh, Telangana, Maharashtra, Gujarat. We actually have gone into it very deep. So that actually is one. The other point is, of course, the team makes a difference. Then third is they're coming off a small base. So 66%, don't read that 66% growth, but because that come from a small base. Probably going forward, they may not grow at that 60-70% growth. Probably they'll grow at 20-30% growth.
Okay, and how many employees do we have, sir? If you could just help me with that in the HFC subsidiary.
Yeah, in Shriram Housing, 3,500 employees.
Got it. Okay, this is useful, sir. Thank you, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Kunal Shah from Citigroup. Please go ahead.
Yeah, hi. So the question was maybe when you look at few of these segments like two-wheeler, MSME as well as PL, no doubt that there is a substantial increase on a quarter-on-quarter basis in the AUM, which is showing the relatively lower stage 3. But otherwise, there is an absolute increase which is there in the GNPA. And in fact, the stage 1 provisions out there, they have also increased. Okay, I think so we have raised it across most of this product segment. So looking at this through, how comfortable we would be in terms of sustaining such a strong growth in these 3 products? Yeah.
So, see, on this two-wheeler, I think this is like a bread and butter product. It's like a bread and butter product for the team. They've been doing it for the last 23-24 years. So I don't see, we don't see any big risk there. And we are pretty confident that we'll be able to hold both the NPAs and the net at these rates.
And replying to your other query on the provision, we have taken a hit of 525 crores as provisions, incremental provisions in the current quarter. That has mainly come out of the stage 1 assets, which has gone up, which has increased by 351 crores, which is primarily again driven by the growth. There's close to 11,200 crores of increase in stage 1 assets. And stage 2 assets, we had taken a hit of 30 crores, and the balance 143 crores.
No, in this stage 1, if I have to look at it in terms of the percentage as well, going up from 3.06 to 3.11. If I broadly look at the split in terms of the segments wherein the stage 1 provision has gone up, it is largely MSME, two-wheeler and the PL. Okay, wherein again in each of these segments, the stage 1 provisions have gone up by almost like 40-50 odd basis points.
Yeah, correct.
in the
so,
recovery.
as I was explaining in the previous caller also, that the provision requirement depends on the LGD and the PD rate, and hence it is difficult to offhand comment on that. So I would request that you contact Mr. Mundra, who will be able to give those final details.
Sure. And two-wheeler, no doubt it's a mainstay, but if you look at the sequential momentum, again, like 16% quarter-on-quarter growth in AUM. So that's, again, quite strong. Okay, so obviously there would have been some increase in the market share and the positioning. But how much is coming on account of any synergies? So if you look at the growth in some of these segments, if you can highlight what is coming out of really the synergies post the merger.
See, two-wheeler is largely has been mapped earlier also by the erstwhile SCUF team.
Yeah,
so all the dealers are already mapped. So where it is, but one portion of the country where this growth is coming from in two-wheeler, new growth, is say Odisha, West Bengal and the Northeast, and portions of UP and MP where the SCUF did not have a strong network. The other point is also basically your quarter-on-quarter growth bound to be there, because any quarter that has Diwali and Dasara, Dhantara coming in, the growth will be strong. The numbers would normally be about more than 2 times of what we do normally in any given month, particularly in November. So that also is a reason for your quarter-on-quarter growth. But yes, because of the synergy, as I said, these states actually are giving us extra numbers.
Sure. And lastly, slightly revising the guidance earlier on the credit cost, we were at somewhere around 1.52%. Now, maybe this quarter also credit cost continues to be 2.4, not coming off. And we are now saying that it will be like around about 2%. So any worries in any of the segment that we are seeing with this kind of a growth?
To be honest with you, no. Because in each of these segments, we operate as a individual, the business teams actually, they are pretty, how do you put this? Each of the business teams have responsibility for the product and they operate within their known environment. So there is no worries on any specific segment as of today.
Oh, okay. Yeah, thanks and all the best.
Thank you.
Thank you. The next question is from the line of Vidul Shah from IIFL Securities. Please go ahead.
Hi. Thank you for giving me the opportunity and congrats on good set of results. So I have 3 or 4 questions. First is on the PL book. So you mentioned that this the provisioning on that is based on the historical track record. So is this the SCUF track record that you are referring to? Is the incremental book that is being sourced in this segment, the customer profile of it, is it similar to what the SCUF customers were?
It is exactly the same. It's not. It is exactly the same because this is basically 99% of this incremental book is coming from mostly two-wheeler customers or customers who have finished one cycle of two-wheeler and a PL and coming back for another PL.
Right. Got it.
And short-term tenor, no. A two-wheeler is a short-term tenor, 18 months, 24 months. So it is very easy to offer to them and keep them in our books.
Okay, fair enough. And the second is basically if I look at the slippages trend, so that has been actually inching up. So in last quarter it increased by 30 basis points, and in this quarter it has again increased by now 45 basis points. So what is driving this?
Which segment you are saying?
On an overall basis, the net slippages adjusted for the write-off.
No, you're talking about. Okay, you're talking stage 3. Stage 3 has actually come down from 6.2 to 5.6.
Yeah, so if you add back the write-off, right, then basically that slippages number is inching up.
Correct. See, if you see the overall stage 3 number of the absolute amount, even the percentage terms it is coming down, absolute amount there is an increase. There is no denying of that fact. And similarly, the stage 1 and stage 2 assets also are going up because the overall book size itself is going up.
Okay, fair enough. And basically, in terms of the growth driver, right? So now, primarily we see that the growth for the SCUF segments is coming from the distribution, expanded distribution that they are now enjoying. So how much more juice is left in terms of being able to, scale up these products in the Shriram Transport or erstwhile Shriram Transport branches? And how much should we expect going ahead? Because these products are growing at 30-35%.
I'll put it this way. If you look at the growth, overall growth of the company itself, where we have guided for about 15% growth at the beginning of the year, I think the growth is also largely a factor in some of these products to the, as you said, expanded network. For example, gold, we have actually introduced in about 600 of the CV branches. There is still work in progress, and these branches have also started producing results, but they have not yet reached the full potential, number one. Number two, then we also have to introduce the gold in, probably we will introduce in another 600 branches going forward in the next year. So this is a work in progress. We'll have to keep on introducing this. Similarly, the SME loans. The MSME loans, basically we need a people trained, so it's not that I recruit and deploy people at one go. It's a stage-by-stage process that we're doing. So we do feel that gold and MSME will continue to grow strongly. The reason again on the personal loan growing so strongly is also major factor is the distribution. Because earlier we were in SCUF, we were struggling to reach these customers because we had about close to 3 million eligible customers and we were struggling to reach them. Now with that expanded network, we were able to reach them and service them. So that's the growth. That's why you see that 60-65% growth in personal loans that you see.
Okay. And if I have to say, ask you to ascribe a number in terms of at what potential have these products reached from these new branches, so as to just get a sense?
Sorry, I didn't get your question properly.
So,
can you?
Basically, like for example, the gold loans from the branches, the 600 branches where you have already rolled it out. So in those 600 branches, what's the AUM, the gold loan AUM, and how do how is it compared to your erstwhile SCUF gold loan AUM in those branches?
So I don't have the numbers offhand, but I think if you can reach out to Sanjay, he can give you those numbers.
Fair enough. And lastly, on the status of the fintech partnerships on the PL and the MSME piece, if you can talk on that. What's the status, the progress?
No, PL fintech is we are only working with one partner. That is only for a sourcing partner. That is it's been working. We've been working with them for last 6-7 years. So we are not pushing that. Basically, it's happening about 4 or 5 crores per month is what we are doing with them. Now, on the MSME side, we have only tied up with Paytm to do only merchant loans. But that is, we are still, finding our way around. So it's not a full-fledged operation as that. We are actually exploring the area. So probably we will only see how we will be able to guide you how much we will do probably down a quarter.
Right. And sir, lastly, basically in terms of the share of the personal loans, last quarter you had said that will probably be capping it at around 4.5-5%. So we have now reached 4.5%. So should we now expect that the growth going ahead will be in line with the overall loan book growth?
Yeah. Though we have a 8% cap authorized by the board, we would like to take it at keep it below 6.
Below 6%.
Yeah.
So basically, there is room for this
now.
Yeah. So you'll probably take this up to 6%.
See, no, we are not a question of taking it up to 6%. As I told you, we have a 3 million eligible customer database. Eligible customers in the sense through an algo, I mean, basically basing on their payment pattern, basing on their income sources, we have a 3 million database. So it is available there in the market. It is available there, and those customers are our existing customers. They are not market customers. So whether I'll to grow, it's not that I'm consciously pushing it. Since we have the data, we were some of these branches where CV branches are also involved, it has grown. But going forward, it should grow at about 20-25%.
Okay, fair enough. And lastly, I would say a bit of data keeping question. So the cost of funds, you mentioned that it has sequentially gone up. But when I look at the reported, the calculated funding cost, that is actually showing a 20 bips decline quarter on quarter. Is that the intra-quarter adjustment, the averaging effect?
That has been mainly driven by the liquidity. So, okay, that reconciliation anyway, Sanjay can help you out offline.
Okay, fair enough. Thank you. That's it from my end.
Thank you. The next question is from the line of Nilesh Jethani from Bank of India Mutual Funds. Please go ahead. Mr. Jethani, your line is muted.
Yeah, am I audible?
Yes.
Yes, sir.
Yes, thank you. Thanks for the opportunity. My first question was in line with the previous participant only. So this 20% odd AUM growth. So I wanted to understand what you would attribute to branch expansion, cross-selling, etc. via the Shriram Transport branches, and what would be the actual growth which you ascribe to this 20% A. Second question is on the passenger vehicle growth. So growth seems to be higher for us. So what you would ascribe to pricing and volume, and how do you see this industry, or see this phase of high growth to continue over the next 2 to 3 year period? What is your sense on that? And third is on the credit cost. So directionally, as the share of SUF products increases, do we attribute from a 2 to 3 year perspective, the credit cost can actually go up to 2.5, 3, which is a normal for a two-wheeler and a personal loan business?
Your answer to your last question is no, we don't anticipate the credit cost to go beyond 2%. Basically, they are holding pretty steady there, and in fact, if you look at the two-wheeler credit cost, it's slightly lower than than the personal loan, which is expected. The other question on the growth ascribed to the expansion or product expansion to branches, as I said, as we said in the beginning of the merger time, we were guided for a 15%, and today we are at 20. I think you can ascribe the growth in gold loan, personal loan, and to some extent MSME and passenger vehicles to the merger effect also, expanded network effect also. Commercial vehicles, not so much from the erstwhile Shriram City branches, but mostly the existing CV branches, because it's difficult to actually evaluate those vehicles, source customers from these branches. Because again, most of the city union branches are situated in urban cities. I mean, in the center of the city or a town, Whereas this business, you need branches in peripheries.
Got it. And on the passenger vehicle piece, volume versus price growth, what we are seeing, if any, you can attribute, and how to look at its growth from 2 to 3 year perspective for us.
We hope the demand will continue to be there. Two things. One is personal mobility vehicles, and the other one is your commercial passenger vehicles. Both are growing, and with the improved infrastructure, I think that will keep growing. There's also a lot of upgradation from a two-wheeler customer to used car.
Aspirational demand is coming to passenger vehicle. That is really helping us. And the previous track record of a two-wheeler customer who wants to upgrade, that helps us to grow faster in passenger vehicle. So that is really helping us to grow faster in passenger vehicle, where we are growing around 30% year on year.
Got it. And if one last question, if I can squeeze in, our branch count from 2,900 has only increased to 3,100 at 3,137. So wanted to understand what is our strategy. So maybe this year or next year, are we focusing on cross-selling and probably start on the branch expansion from a year or two later? What's the thought process of the branch expansion?
Most of these branch expansions are happening where we are having a rural center, we are converting that into branch after reaching a certain growth. So that is the main addition into the branches. And also there are some locations where we feel the gold loan, the customer can get, we can offer gold loan in the residential area. There we are putting the branches. So totally we have added 136 branches in the last 1 year, if you look at last year, same period to now. So our commentary also was, guidance was that we will be opening around 100 to 150 branches, which is a combination of conversion of a rural center and the new branches.
Okay, got it.
Thank you. The next question is from the line of Chandrasekhar from Fidelity. Please go ahead.
Hi, thanks. I had a few questions. One, could you just remind us within this how large is the used bus segment? That's one. Then maybe how large is our fleet operators, within this segment, and what is the average ticket size right now on the passenger vehicle segment?
We don't have a large bus segment which is financed, because most of these bus operators, tourist buses, we don't lend much. And the normal transportation buses, where the government has a monopoly, we don't lend. So most of our lending...
No, I meant school buses.
Four-wheelers and the local transportation.
Yeah, Umesh, sorry, I meant school buses.
School buses, we have a reasonably large portfolio. But post-COVID, it has not really grown big. During the COVID, it came to a standstill. And after that, it has not really grown big. But that's a very, highly, least credit cost portfolio. It's one of the good portfolio, which we may consider growing as the business picks up.
Right. So is it delta coming in from people upgrading their fleets over here, like the fleet operators, Ubers and Olas upgrading their fleets? Because, my understanding is that the entire used PV segment is like a 100,000 crore market size, and our book is already 35,000 crores over here. So I was just trying to get some sense around the market sizing, and then this how large we are relative to that.
See, normally what happens is you can't just have a strict monitoring of a passenger vehicle. It is thumb rule is 1/3, 2/3. 1/3 is used for commercial use. 2/3 is for personal use. Even the vehicle registered in a personal use, gets used for a commercial vehicle in the commercial activity in the semi-urban and rural area, not in the urban area. Urban area is strictly monitored. So many of the customers would be having a vehicle which is registered as a personal vehicle, but using for commercial purpose in the smaller towns. So the business in the semi-urban rural area, that is where we are very active. And many of them are SUVs or NUVs or a car, and not much in buses. We don't have large bus portfolio.
Is it safe to say that the average ticket size here will be about 150,000 bucks? Approximately?
150,000 no. Over 2 lakhs. No, it will be higher. It will be around 300,000.
Okay. Okay, 300,000.
3 lakhs. Yeah, 3 lakhs.
Chandra, it's about 2.5 to 3 lakhs. The used car prices also have gone up substantially. Yes.
Okay, got it. On the MSME segment, are there any changes in the ticket sizes or tenures which we have done? I mean, we used to have 8 to 10, it came down to 6 to 8. Is it going up towards 8 to 10 again?
No, it's still the same. It's still about 8 to 10 only, and there's no change in tenors.
Right. And sorry, the last question, maybe you could just help us. There was 100 bits of capital consumption in the quarter. Tier 1 down to 20. So maybe just help me understand where did 100 bits get consumed within 1 quarter itself?
100% of capital.
This is 100 to 8.
No, it is mainly with all the growth. Yeah. And some 20 basis point increase due to the risk weight attributed to the personal loans.
Right. Okay. Got it. Okay. Thanks.
Thank you. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Good evening, everyone, and sir, congratulations on a good quarter. First things first, more of a data keeping question, if you can provide the product-wise split of your disbursements.
Product-wise?
Yeah.
What?
Yeah, disbursement.
1 second.
Yeah. The CV was 14,449. Passenger vehicles 6,092. Construction equipment 2,780. Farm equipment 464. MSME 4328. Two-wheeler 3699. Gold 3120. Personal loans 2853. Totaling to 37,787.
This is useful. Thank you. So the second question I had was on the liabilities. Obviously, there were multiple questions on where the cost of borrowings have moved up, where the incremental cost of borrowings are. I wanted to understand, the impacts from this RBI risk weight circular, where it has increased risk weight on bank loans to NBFCs. Is that impact already there in our cost of borrowings, or do you think that large part of our borrowings are PSL and they will not be impacted by the increase in risk weight circular? Broadly, what I'm trying to understand is, how are the banks posturing on the liability side? And the other thing is, from what I understand, given the deficit liquidity in the system, short-term rates have actually spiked up. Is it not really having any impact on the cost of borrowings, or will it not have any impact on your cost of borrowing? Because somewhere I remember hearing that you are saying that we don't expect cost of borrowings to go up further.
Yeah, I think 2-3 things. One, what you said right was immediately after RBI notification on the higher risk weight for the lending to NBFC, some of the banks, 2-3 banks have actually increased the overall rate for us. Most of the other banks have only said that on incremental lending they will increase the rates. So as I mentioned, the incremental cost of fund for us for the quarter was 8.95, which was previously the banks were lending at around 860 to 875. That is why we don't expect, even at higher lending rates, this to breach at beyond 8.95 is something which is not foreseen. so that we don't look at any substantial increase because of the incremental borrowing from the banks be at a higher cost. That is not foreseen. Any other your liquidity-related concerns, whether there will be a further spike, I think that liquidity tightness is there for some time. The capital market rates had gone up, and that is all factored in. We are not seeing any further increase in the capital market rates. So beyond this, we don't, as of now, we don't foresee any substantial increase in the liability cost.
Okay, sir. This is again very useful. And my last question was again kind of circling back to Shriram Housing. While I understand you have already partly answered that we'll be looking for capital infusion in your housing subsidiary. So from what I recall earlier, the discourse used to be that we will maybe look to get an external investor in the housing subsidiary for maybe a primary equity infusion. I mean, what recent media articles are suggesting that, and you yourself acknowledge that you are looking at various options. Some of the media articles have even gone to the extent of stating that you are even looking at completely selling down the HFC subsidiary rather than, doing an IPO of the subsidiary at some point in time. So if you could just briefly elaborate on that.
At the time being, we're looking at all the options with open mind. We're not either just choosing anything right now. So I will not be able to give you a very specific answer because we are still looking at all the options or various options.
Got it, sir. This is useful. Thank you and all the very best to you and your team.
Thank you. We would take that as our last question for today. I would now like to hand the conference over to Mr. Umesh Revankar for closing comments.
Thank you very much for joining this call. As you are aware, the last quarter will be always the biggest quarter, and we all are looking at the final quarter for this financial year as going to be a very large quarter and also busy quarter. And we also have a budget which gives, even though it is interim budget, which gives some indication on government's plan on the infra spend, which is actually giving in the last couple of years a big boost for the most of the demand for commercial vehicle and the construction equipment. We all hope that will continue to remain as the primary objective of the government of building infrastructure for Make in India, and therefore we expect a busy quarter and also a good set of numbers. Thank you very much for calling. We'll meet you again next call. Thank you.
Thank you. On behalf of Shriram Finance Limited, that concludes the conference call. Thank you for joining us. You may now disconnect your lines.